A lot has happened in the past 1 week in the business cycle, causing a paradigm shift in business activities around the African continent, one of which is Nigeria's signing of the Africa Intra-Continental Free Trade Agreement in Niamey, Niger Republic. What does this portend for the country, and is Nigeria ready for the outcomes? This and more will form our discussion today on the portfolio, reaching you from Abuja, the nation's capital. I'm Chimobi Walter, and many thanks for joining us. Let's now take the news segment.
Many thanks, Chimobi. Now, the Securities and Exchange Commission is working towards strengthening and deepening the capital market. This was the thrust of discussion as the Executive Director News of the Nigerian Television Authority, Mohammed Labo, met with the management and staff of the Nigerian Stock Exchange in Lagos, who are seeking a workable relationship between NTA and the Commission. Meanwhile, the Nigerian Stock Exchange has listed Airtel, Africa's second largest telecoms operator, on the main board of the exchange. The company's listing is expected to give a market capitalization of $3.8 billion, making it the third most capitalized stock on the exchange after Dangote Cement and MTN Nigeria. Moving on, Central Bank of Nigeria has released 35.9 million naira for 166 projects under the Commercial Agriculture Credit Scheme. CBN Governor Godwin Emefiele disclosed this at a meeting with Vice Chancellors of University-Based Poultry Revival Program in Abuja. The Apex Bank says 507 million naira was also released to 433 farmers and another 238 million naira for 112 projects under Agribusiness Small and Medium Enterprises Investment Scheme. Meanwhile, Group Managing Director of the Nigerian National Petroleum Corporation, NNPC, Mele Kolokiari, says the national oil company under his leadership will target 40 billion barrels of crude oil by 2023. The Group Managing Director assured that the 4 major refineries in the group will become fully functional by 2023, as well as unveil a roadmap that will guide its growth objectives both in the short and long term.
This country must be a net exporter of petroleum products. It is the intention of NNPC to support the industry to make sure that we achieve the production level of about 3 million barrels a day.
And that concludes the news. I'm Comfort Amadou. Enjoy the rest of the program.
Thank you for being there. The continent of Africa at different times has been described as a haven for economic activities. It is no longer a surprise that investors from Europe, North America and Asia, especially the Tigers, have been active in Africa's economy for the past 2 decades. No wonder the idea of the Africa Continental Free Trade Area, with a potential market of 1.2 billion people and GDP of $2.5 trillion was muted by member states to fully harness the economic potential in the region. Nigeria, considered as the largest market and economy on the continent based on its population, initially declined being signatory to the agreement. Now, a development other African nations see as a setback, as they see Nigeria's participation as critical and indispensable. After extensive consultations, Nigeria eventually signed the agreement at the extraordinary session of the African Union in Niger Republic. Today, I'm being joined in the studio to look at the impact of that agreement, a renowned economist, Professor Ken Ife. Many thanks for joining us.
Thank you for inviting me.
All right, Professor, I mean, let's first of all try to put this agreement into proper context. Can you elucidate more on what this agreement really stands?
Okay. The signing of this agreement is the main event in this whole continental arrangement. Nigeria's signing is the main event. And in fact, in a way, it's a fait accompli, because Nigeria has been fundamental to all of this effort. In 1980, we had the 1980 to 2000 Lagos Plan of Action,
Yes.
which was the genesis of this, and they focused more on agriculture, regional integration, but the lower end of free movement, AFCTA type of thing. But in 1991, we had the treaty, Abuja Treaty of Africa Economic Community, which is at a much higher level. Because in integration, regional integration, there are 3 levels. The ground zero is what we are talking about, the free trade area, which is common market. There is a level 2, which is customs union. And the major instrument in customs union is common external tariff, which we have implemented in ECOWAS. The 3rd region is monetary union, and that is economic community, really, in full. So, and we're also way down on that in ECOWAS. So what happened at this ground zero, you have to sign, and then you have to domesticate and ratify the treaty, and then it goes and gets lodged in WTO. So, but in the subsequent ones, level 2 and level 3, it would have to be by accession. For example, those who want to join the common external tariff and union of ECOWAS will have to accede. And in the same way, others will accede if they're interested, if they want to go into the currency. So now, what has happened here is that the president had to put a stop to this process because he wanted to hear the story. He wanted to hear the 2 sides of the argument. And what that tells us is that there wasn't enough depth in the consultation that took place. So they wanted to hear that. And then obviously all the fears were brought to the table. And then he decided to do what he could do, which was to go and sign, pass the baton to the House of Assembly to quickly ratify this. And there's a good reason for them to do this quickly. Because once this instrument is lodged at WTO, normally anybody coming in has to be by accession. Now, what it means is that we will be disadvantaged if we have to go by accession, because all the negotiable instruments we would have been negotiating and saying we don't want that, we don't want that, we don't want MOTU with South Africa, we don't want that. You leave all that because you will not have to accept everything as they are as a condition of entry. So that's the big disadvantage. So the president has kicked that off. Then what do we have to do as a nation to prepare our companies and industries to be able to get the best or most out of this? What I have suggested there is, 1, we have to have institutional arrangement that are going to protect and advocate. And what do I say? We need to have a minister for integration, for regional integration. Most countries have regional minister for regional integration. Well, I don't know where our own is hidden, whether it's hidden in a foreign ministry somewhere. We need to have a minister for regional integration. If not, bring a title and attach it to an existing minister.
Prof, if I understand you perfectly, I think you're saying that ratification of these agreements really will give Nigeria a bargaining force. Is that what you're saying?
Yeah, it's very critical because you have to do that. That's the second condition. And then you open the door. We open the door, we can fly, we'll now take part. We're not going to be an observer, we'll take part fully in subsequent negotiations, because this is just the beginning. Remember, the intention is to have 90% of the goods liberalized. We have to decide what the 90% is going to be. We're going to decide what the 10% we don't want to go into that initially. We have to make those decisions. Then you come to services. There are mode 1, 2, 3, and mode 4. We have to look, with our eyes wide open, which mode do we want to accept for Zambia or South Africa or that, or Algeria that wants to, or Morocco that wants to join. We want to know. We negotiate everything. Everything is on the table. And then, of course, there are instruments that are useful. For example, the dispute resolution instrument. That's very, very useful because we didn't have that. I did a study on it in 2008 for EU, in ECOWAS. It hasn't been implemented. So, but that's why you couldn't do much on Ghana kicking us in the teeth on investment.
Because we have very limited time, I'd really like to ask you this very important question. What does this really portend? Looking at the fact that most of African countries are consuming nations rather than producing nations. What does this portend for our local industries vis-a-vis the rice farmer who is in Akure or who is somewhere up there in the north? What does this portend for him? Do we have security for him?
Okay. Now, if you look at the industries, if you look at the agricultural sector, different sectors have different challenges. The manufacturing sector will tell you we haven't got enough power. Now, and then transport cost is very high. Now, the question, what you're going to say to them is power, nobody has enough power, and is a moving target, and is a work in progress. But then, the most important thing is, what do we have to offer them? We need to have a strategy called AFCTA strategy that identifies actions that need to be taken, how these industries are going to be protected, and incorporate that in our economic recovery and growth plan so that you mainstream these across the sectors and the various MDAs. Understand?
Yes.
So that's a big action. Then you also have to have institutional arrangement to ensure that you can keep a tab on this. You have, some kind of interministerial committee that is making sure, bringing all of them together as a standing interministerial committee, making sure that they're working on this, and then a minister that is responsible in cabinet for regional economic integration. This is got very serious now. All other small countries have, even though they don't contribute that much to the region, but they have, because that helps them. And that's the people that should be crying. That's the man that should be running up and down, or woman, instead of them disturbing the president that much. Now, there are other things. There are big benefits. Now, 80% of the industries manufacturing in Nigeria are actually importing their raw materials. Most of these raw materials can be sourced in Africa. It saves you. It deepens regional integration. In the same way, we also export to Africa. So it's a two-way trade. All our companies assembling cars could go out there. You've seen Dangote, 40% of cement manufactured in Africa is Dangote. There are more. We have multinationals in oil and gas springing from Nigeria across. We have banks. Half of the African continent is covered by Nigerian banks. That's carrying investment in there. And so our businesses must follow our investment. And they know. And Nigeria has been the leader in this whole thing. And that's why they developed a code fit. Where is our leader? Our leader. So that's important. But now let me tell you that major investment decisions coming to Africa are heading to Nigeria for several reasons. If Coca-Cola wants to do a new factory, $500 million, where do you think they're going to put it? They have to put it in Africa, in Nigeria, because it guarantees them at least you've got a big gap to fill in market demand.
Okay, so let us look at this perceived this perception rather of Nigeria having a lot of porous borders. Wouldn't this mean substandard goods finding their ways into the country?
You are correct. There's nobody that doesn't have substandard, that doesn't have a porous border across Africa. Nobody secured their borders completely. The thing is, now what the president has done, he's not ready to wait for all the shenanigans about when is your policy going to be ready. What is that? No. He's taking action in advance before even going to sign. He has issued presidential directive on 10 value chains. Asked Central Bank, gave the marching order to fund to the teeth, not by to the teeth, end-to-end intervention. So you've seen CBN going out for 10 value chains. I can give you the names. And then they're from clearing the land, developing the land, producing the seeds, supplying the input, or the production, processing to market. 10 value chains. Then secondly, it's created the demand. So that's supply-based action. Then demand means presidential order 3, you have to buy local, buy made in Nigeria. And then give the procurement people say, look, recognize that procurement of these goods must be prioritized. So you have a premium on their prices. If they're quoted, you may allow them up to 10%, but because we know they're made in Nigeria and all of that. But most important is the directive on enforcement. Because if you don't enforce, then you're in trouble. Back to where you're doing smuggling of goods and then dumping of goods. When you smuggle, you will lose the customs revenue. When you dump, you are doing two things. One, you are killing us because you don't know what you are giving us. There could be some substandard goods.
Exactly.
NAFDAC didn't verify this, didn't check, NASON didn't. So that is not allowed. Nobody would allow that, not even WTO. The second one is dumping in the sense that goods are being subsidized by foreign countries to enter into Nigerian markets, which means to suppress our capacity to produce those goods. And that is unfair practice. So we need to stop that. So that's why CBN said, you try it, I'll blacklist you. And then it has the presidential backing to do that. So with that, at least the president has exhausted his support for this. Now let's have the rest of them to play. Let the assembly do their job. Let's get a strategy in. Let's get a minister that listens, and then let's get the whole institutional framework roll out. That's what I think we should be doing.
All right, so, but is there still a possibility of Nigeria, still maintaining its lead in the continent with this single market structure?
Of course we are. Now, let's look at the projection. Today, they project that by 2050, all our populations will double anyway. Nigeria will be 450 million by then. African population will double, about 2.5 billion. Now, to move from $2.5 trillion to $29 trillion by 2050. And correspondingly, Nigeria will be about $6.4 trillion GDP. That is huge. That is colossal. Making us the 10th largest economy in the world, ahead of France, UK. All these countries will be going to be ahead of them. You have to realize this through a continental free trade. It's huge opportunity. And then the other economies I mentioned to you is, okay, I looked at capital importation report last week and then saw that we already jumped 216% in capital importation just in a quarter. And then I disaggregated those data to look at where are these money coming from. UK 4.5 billion, the highest. America 1.5 billion. Doesn't that tell you something about Brexit? We have to do something. We have to strategize on that. Then you look at the South Africa came fourth with almost 800 million. Then 8 African countries are jumping up and down, investing in Nigeria. So they actually see more potential in Nigeria than we Nigerians. So we need to know. Then I also tried to look at the channels where the money was coming through. 85% of that were coming through 3 South African banks. Stanbic, Standard, and the South Africa Rand Bank. Does that not tell you something? And South Africa is the biggest investor in Nigeria. They have the MTN, they have the Pack and Shop, and what's the other one? ShopRite. They make money. They have DSTV. And there are more of their multinationals are here. So they can actually see opportunity in Nigeria much more than we can see. So we need to, our strategy must capture this and see how we could intensify that. And obviously, when I told you that the biggest investment decisions coming into Africa will be coming into Nigeria, our question is how do we capitalize on that? Build and integrate Nigerian small producers into their supply chain. We have local content law. It's just about enforcement. It's about plan to deliver. That's what is missing. It's happening in the oil industry strongly now. We've got to get that in other parts of the economy.
All right, so earlier we talked about the borders and having goods coming into, through the borders. Aside from the customs service, are there other agencies that must, actively participate to ensure that whatever goods are coming in are certified goods and, up to standard?
Well, we have NAFDAC, we have the Federal Produce, we have SON, we have even CPC dealing with some aspect of this, but from consumer perspective. The customs, of course, is their main duty. You have immigration. You have immigration because some of these goods accompany somebody. So immigration.
To what extent would be their contribution? Looking at the structure of the agreement.
The contribution of our own trade-related agencies.
Yes.
No, their contribution is very key. You have NPA, you have National Shipping Council, you have NIMASA. We have so many agencies. About 26 of them involved in one way or the other. Narcotics, we have them. NDLEA, we have a lot of them. But they need to be supported, just like CBN. CBN is not a border agency, but it's picked up it says to them, I know all of you that are importing and dumping. I know all of you. And I'm going to be blacklisting you.
All right. All right, let's have your closing thoughts just before we go in just 1 minute because...
what I will say is that the times are good. I have more confidence in our economic future. But we'll have to work. We really have to work. The president has shown his commitment to this happening. He has listened. Everybody has listened. Everybody knows what the problems are. And then we just have to work together to ensure that we'll capitalize on the opportunity. And the opportunity is horrendous.
All right, many thanks for sharing your time with us. I've been speaking with Professor Ken Ife. He is a macroeconomic policy analyst on harnessing the potentials of the Africa Intracontinental Free Trade Area for Nigeria. Many thanks for being with us.
Thank you very much.
All right, so we now join Joy Uzo for a review of the capital market. Do stay with us.
It's good to have you join us for the Capital Market Review segment for the week ended Friday, July 5th, 2019, a total turnover of 1.025 billion shares worth 9.911 billion naira in 19,375 deals were traded by investors on the floor of the Nigerian Stock Exchange. The NSE All-Share Index and market capitalization depreciated by 2.32% and 2.30% respectively to close the week at 29,270.95 and 12.902 trillion naira respectively. Similarly, all other indices finished lower with the exception of the NSE Industrial Goods, which appreciated by 3.28%. The financial services industry, measured by volume, led the activity chart with 660.844 million shares valued at 5.735 billion naira traded in 11,296 deals, thus contributing 64.49% and 57.87% to the total equity, turnover, volume and value respectively. The healthcare industry followed with 95.150 million shares worth 61.699 million naira in 174 deals. The third place was industrial goods industry with a turnover of 89.419 million shares worth 1.416 billion naira in 1,723 deals. Trading in the top three equities, namely United Bank for Africa PLC, Zenith Bank PLC and FBN Holdings PLC, measured by volume, accounted for 297.889 million shares worth 3.095 billion naira in 3,998 deals, contributing 29.07% and 31.23% to the total equity, turnover, volume and value respectively. A total of 12,375 units of exchange traded products ETPs valued at 6.223 million naira were traded last week in 8 deals, while 1.007 million units of federal government bonds valued at 1.024 billion naira were traded the week under review in 14 deals. 21 equities appreciated in price during the week, 44 equities depreciated in price, while 103 equities remained unchanged. And on the foreign scene, the United States equities fell as investors took a courteous approach to a week full of central bank activity. Treasuries edged lower and gold retreated. The S&P 500 slipped for a second day after Friday's blowout jobs report altered market calculus for Federal Reserve rate cuts. It decreased 0.5%. The Nasdaq Composite Index lost 0.7% and Dow Jones Industrial Average fell 0.4%. Meanwhile, European shares opened lower this Tuesday in what could be their third straight day of losses, as German shares fell sharply due to a profit warning from chemicals giant BASF. On that note, we conclude it on the Capital Market Review segment. Many thanks for your time. I'm Joy Uzo.
Welcome back, and that's it on the portfolio for this week. Many thanks for being with us. Just don't forget to reach us on the platforms showing on your screen. We shall be back next week with another interesting topic for you. From me here in the studio and the production crew, we say have yourself a wonderful week.